Thank you so much for joining this particular webinar. So today we have a very special guest from the Kenya Revenue Authority, and we are hoping that he's going to demystify some of these questions that we do have and to enable our organizations to stay legally compliant. So we are a corporate commercial law firm, but we also work within the digital asset space. We help clients become legally compliant, but at the same time, we also contribute to conversations towards policy development in the country. And I'm really happy that we could have all of you on this call. And today we want to really understand a little bit about taxation. And because during the recent paper clipping, there was something about taxation and how it's going to affect crypto exchanges. So today with me is, and before I introduce my guest, I want to say thank you so much to BitKE Kenya for partnering with us for this particular webinar. So we're really happy to as well have you on board. So without further ado, I want to introduce our guest speaker for today. I know him as having one role, but let me tell you something, our guest, there are questions here that I'm seeing that may not touch entirely on your role. So perhaps you're going to help us answer those questions. So Nixon Omondi is the manager in the digital economy tax division within KRA, and is going to be taking us through a very short presentation just to bring us up to task. What are the legal tax compliance measures that you should take into consideration? And afterwards, we'll have a moment of question and answers. So you are free to unmute yourself to just ask those questions, or if you're not comfortable to do that, please do write them in the chat session. So without further ado, I invite Nixon. Please do take us through your short presentation. Thank you so much, and karibu, and welcome to everyone who has onboarded on the call. Thank you.
Thank you, Mudhoni, and I appreciate the opportunity to engage with our taxpayers and tech enthusiasts and those who are in the digital space with respect to digital, assets. Some people like to narrowly call them cryptocurrency, but I know it's more than just cryptocurrency. So because of bandwidth, you'll allow me after this, maybe I'll put off my video. I put up a short presentation just to get us going. And then I'll come back to you, Mudhoni, for maybe the Q&A. Please feel free to shoot your question in the chat, and we are able to address them even as we proceed with the presentation. As already introduced, Nixon Omondi, the unit is the Digital Economy Tax Office of KRA, and that is where we do administer and also just ensure that those who are supposed to pay the taxes do pay in the digital space. So our presentation will largely cover a brief on the digital asset in Kenya, a few statistics that we have for you. Then we look at digital service tax, VAT. These are taxes that still touch on the digital sphere and also partly on crypto assets or digital assets. And then we delve into digital asset proper, including the legal framework in Kenya. And then we'll close with what is KRA doing just to ensure that we facilitate taxpayers to comply with the various laws and regulations. So my opening photo here is somebody with, I don't know, Mudhoni, whether this is, which tool is that? There are three people. Three people are holding some tools. Mudhoni, what do you think?
I think I see a gentleman who looks like he's carrying our national budget with a proverbial briefcase.
Yes, he's carrying all our money.
He's carrying all the country's money. And I think I can also see a gentleman with I don't know what that tool is called, but he looks like he wants to mine Bitcoin. So,
Good.
And please, the rest of the participants can as well chime in into the conversation. Thank you.
Super. Thank you for that. I think that takes us into what we're gonna do. So our Income Tax Act, specifically Section 12F for the readers in the house, defines a digital asset as anything of value not tangible, and cryptocurrency can be a token code, can be a number held in digital form, provided that all the tokens, the currency, the numbers are generated through cryptographic means. I don't tech as a technical person in terms of technology. I'm a technical person in taxation and most of the digital economy. But what the law simply says is that if you have any of the three, and it is generated through the cryptographic means, and we know that a bit of cryptography is what is entailed in the blockchain technology, then we'll be looking at a digital asset. So a digital asset is not limited to cryptocurrencies, and we'll see others. And so you'd see that a digital asset can be a non-tangible cryptocurrency, okay? And it can also be an NFT or a non-fungible token. As we know, people are able to, make certain photos and then through cryptography, then have them into the cryptosphere so that they are then transacted, sold, or kept in that kind of technology. So what we are saying is, whatever name you want to call it, whether it's a cryptocurrency or a non-fungible token, you can have many other names, but it should qualify as a digital asset if it is generated. It's in a digital form and through cryptographic means. So many taxes apply to this kind of. So thank you. So when somebody is providing digital services, in a broader context of the law, that person is required to pay DST. However, effective 1st of July 2021, DST was left for non-residents only. So if a non-resident is applying services or providing services to Kenyans, the law requires that person to pay digital service tax at a rate of 1.5% of the total amount that that person generates from Kenya. And so in the crypto sphere, and in the digital asset, environment, we have the exchanges, and some of those exchanges, of course, are not based in Kenya. And when you exchange your coin through the exchange, they generally charge you some commission, okay, for facilitating that transaction. So what the law then requires is that upon on the commission income that the exchange receives, if the exchange is a non-resident person, they are required to pay a tax of 1.5% of what they have generated from Kenyans as DST. So when it is a digital service, you look at how much have the company received. If it is intermediation services like the one for exchange, they are basically paid a commission or a fee. So then the 1.5% will be applicable on the fee. The tax is a final tax. Remember, it's a tax on non-residents, people who will not be required again to file another return at the end of the year, just like you and me, we do. Another important tax is VAT. And VAT is a tax that has been implemented, I think, in over 200 countries in the world. And the essence of having this VAT, and all of us should be aware that VAT is a consumption tax. So if I am a consumer of a service or of a good, if VAT is chargeable on that good or service, me as the final consumer, I'm the one who bears the tax. The middle people simply collect and pay the tax to the government on behalf of, myself as the final consumer. So the same exchanges provide services that facilitate exchange of those currencies or those NFTs or whatever has been a token. It can be a token, a tokenized, any other asset. And so if an exchange facilitates and they charge a commission, that commission will also be subject to VAT. So the exchange should be charging you their commission plus a 16%, which is a tax on consumption of their services. So, but when you use the crypto as a medium of exchange, you're simply using it to buy furniture. You want to use it to buy goods. There are hotels that accept, cryptos. and you're going to use it to buy another service or good, then it doesn't function as as a supply in itself. It's a functioning basically as money. So I think it's also important to remember that for exchanges, we are basically looking at two other taxes, VAT and the DST, which are applicable. But if the exchange is a fully Kenyan resident exchange, then they will be subject to the normal taxes that are applicable to maybe a supermarket or any other person in Kenya. That will be pay as you earn if they have employees. There will be income tax or corporate tax, where they calculate income minus expenses, and then the resulting profits is then chargeable at 30%. And then you also have VAT, just like the non-residents will do, and other attendant taxes, capital gains tax if they have a capital asset that they are transferring or selling. So it's important to draw those differences for residents and the non-resident entities that operate in the crypto sphere. Then the major tax applying on the digital assets or the crypto environment is the digital asset tax. So when you look at digital asset tax, we are looking at a tax that is imposed on what I said as a token, a cryptocurrency, or anything that has been generated, which is in digital form, but generated through cryptography. So you're looking at cryptocurrencies, you're looking at NFTs, and other blockchain-based assets. And maybe Mudhoni, you'll guide me. Are there other blockchain-based assets? Okay. We have a photo of the common cryptocurrencies that we have, and as a revenue authority, we are not putting, these 8 because they are of preference. No, this is just an example. There are over 2.2 million cryptocurrencies in the world. So there's Bitcoin, there's Solana, there's Polkadot, there's Tether, there's Ethereum, there's Dogecoin, there's Litecoin, there's XRP. There are as many as 2 million types in the world. Then there are about 709 exchange platforms. Okay, I think that is a very important statistics to take, because we'll be looking at those exchange platforms with respect to accounting for digital service tax. And then globally, research shows that the crypto market capitalization is about 1.87 trillion US dollars. So this is not a small industry. Okay, I know there are also figures for Kenya, but there's a lot of controversy as whether those figures are overstated, they're understated, or they are real. Because from where I sit, people have estimated the crypto, environment, the crypto market in Kenya to be more than 2, 3, 4 trillion Kenya shillings. So it's a huge market. But now the issue is, how do you authenticate such kind of estimates? And then the market is dominated by Bitcoins, the BTC at 52.5. Mudhoni, you'll guide me if that statistics is right. And then we have Ethereum at 17.0%. So imagining out of the 2.2 million, 2 coins or 2 cryptos have already accounted for well over 69%, close to 70%. So it means the other 2,199 something thousand are scrapping for the rest of the market. So it's an interesting read. Okay. So when you come to the income tax, basically, we know that crypto, of course, since 2009, in Kenya has gained a lot of traction. Very common, I think, with the young people and also those who are a bit of risk takers. Okay, whether as a transactional approach or as people use it to keep the value. So somebody can store value in a crypto. You can buy your Bitcoins and keep it there. And Mudhoni, I hope we have enough, because I was imagining that in 2016, one Bitcoin was barely, I think, 50, 60,000. Today, one is going for 8 million or thereabout. I know there's an issue now. The market is coming a bit down, but that is expected because of the geopolitics that we have in the world. So the Finance Act of 2023 introduced the new digital asset tax. I call it new because it's one of those new taxation regimes that came up together with others. So the law effectively was implemented from 1st of September 2023, where anybody who has a crypto asset as a digital asset, exchanging it, transferring it, selling it, the tax is 3%. And from where we sit, once you pay that tax, then it should be a final tax. However, it is a transactional based tax, meaning as you sell your asset, as you exchange your asset, as you leave the market off ramp. I know there's those technical terms that maybe later we'll delve into. Then we expect you to pay at 3%. So some of these transactions is where you are selling tokens for stable coins. So you have a token, you're making it into a stable coin. You have a Bitcoin, you're moving it into a USDT, or you have another token where you are exchanging to a USDT. And then you also have where you are purchasing a token with another token. Okay, you are using Pandora to buy Grok, or you are purchasing usually, I think should be when you are also selling your NFT. If you have an NFT and you're selling it, then you're subject to the tax. We also have airdropped tokens. Mudhoni, I hope you'll also school me on what is airdropped. We are used to seeing paratroopers dropping from the air. Some of us might want to understand better what is airdropped tokens. So we have a few common platforms or exchanges in Kenya. I'll not mention them, but we know that there are 3 or 4 dominant exchanges. Remember, we said there are well over 709 exchanges. So I know in Kenya we have 3, 4, 5 dominant ones. Some are Kenyan-based, others are based outside the country, but of course they are accessible to Kenyans. Who is responsible for this tax? Remember, I said that if I'm the owner of a few Bitcoins, and I wish Mudhoni I was, owner of a few Bitcoins, maybe fractions, then what is required of me is that when I exchange or sell, then the tax of 3%, then the incidence of tax occurs at that point. But who is responsible for collecting it and remitting it to the commissioner? It is the exchange, whether it is decentralized or centralized, is required to collect the 3% and remit it to the government within 5 days. So if today I have my very good Litecoin, for example, and I'm having a 0.002 of its value, which might be 5,000 or less, and I've decided to sell it to my good friend Sheila. Okay, at that moment, the law requires that the exchange I'm using to sell it, to transfer it, of ramp, some such other technologies, is required to collect the 3%. If it is today, the 24th, within 5 days, which will be by 29th, the exchange should have, then remitted or paid that money into the government revenue authority accounts. It is basically paid through our normal channels, the iTax system. You go into the iTax, there's a whole process of how to generate a payment receipt number. And then after generating that payment receipt number, you can then pay it using any of our agency banks. For non-residents, we know they are already paying their other taxes, digital service tax and VAT. So the moment they also generate their payment receipt number, they can do a swift instruction so that the money is then wired into the government accounts for purposes of revenue collection. So if it is a non-resident person, the law also provides that we are able to give them PIN numbers for purposes of facilitating them to comply with the Section 12F of the law. Currently, we still have, I think, a few processes to complete on iTax, and therefore we are asking all the exchanges to be depositing the money into the central bank account, okay, where it can then be reconciled at a later date. All the monies are paid in Kenya shillings, and I think that is a possibility, is not a challenge. But we also understand that some of the crypto transactions are not the ordinary transactions that we do every day. There's a bit of a longer process from fiat to crypto, or crypto to fiat. There are a number of other intermediary transactions that I think needed to be taken into account. How do we plan to enhance compliance of this sector? So number one is taxpayer rights in private and public rulings. Our own Tax Procedure Act, Cap 469B, Section 65, 64, 65, 66 allows any taxpayer who feels the law applies to them in a particular way to ask commissioner if commissioner is also in concurrence with the way the taxpayer understands the ruling. So for example, if the law is saying that exchange, if you are exchanging any digital asset for another, you are supposed to pay the digital asset tax of 3%. What happens if you are just moving it from a crypto to a stable coin, okay? Or from a stable coin to a fiat, or account, or for the 3% to USDT to then fiat? Is that also a taxable transaction? So if there's anything that proves technical with respect to the law and the business of the taxpayer, you have a right to write to the commissioner to guide you on the interpretation of the law. And of course, by dint of that act, the ruling is only binding on the commissioner. We also have a lot of opportunities for taxpayer education, such as this forum, where we sit down, understand your business. You also understand the law from our point of reading, and then from there we are able to pick up differences for purposes of reconciliation, conciliation, and then compliance. So we do a lot of tax education. We have a whole unit dedicated for tax education, knowledge management, and also ensuring that taxpayers' rights are actually upheld. We also do a lot of collaboration within the government sector. I know there's a joint financial sector team. There's also a joint team that is working on a crypto framework, from taxes to regulations to sandboxing to all those other phases of cryptos, as a whole government approach. So the government is keen to ensure that, we spur investment in this sector, but also if there's any tax, then it is also collected. We also engage internationally. As you are aware, I don't know, Mudhoni, if you're aware, the crypto reporting framework became live from last week. And so it will be part of information that can be exchanged with the Kenyan government. So if you have your assets in another country, that country is then obligated to report to Kenya that so and so, for example, Cynthia is holding so much in Litecoin in a certain country, whether it's Cyprus or Malta or which other country, so that then we are aware. So that is part of our international collaboration, together with other mechanisms that we can employ in order to ensure that there's compliance. And then lastly, on what you mentioned, Mudhoni, and I'm wondering how this came about, because I've been quoted on this article of 19th of October, that Kenya is to implement real-time crypto tracking for better tax compliance. Yes, we know that use of technology is the sure future for tax compliance. Not because the government want to collect a lot of money, no. It is because the government want to collect tax in a more simplified, more non-disruptive, and also convenient way. So with technology, then it becomes a little bit less extraneous in terms of paying of your taxes. And that is why, as Kenya Revenue Authority, we seek to use technology to simplify tax payments, hasten tax payments, and also ensure that, of course, at the end of the day, there's compliance. So what we are doing is to see whether API integrations can assist in real-time collection of taxes. We have done it in the past with the betting sector, and I'm sure it can work even for this sector, which has high use of technology. So yes, we are having discussions around this area. You are also aware that there is the eTeam system, which is also an integration. And there are some taxpayers who have simply integrated their own eTeams developed system with ours under system-to-system integration initiatives. And from there, then, the process becomes seamless and very less disruptive. So, Mudhoni, with that, I'll just leave you with my final quote here. Government is asking you, you owe us money, which is called taxes. And Mudhoni, you are saying, how much do I owe? Nixon comes and tell you, you have to figure that out. So you have your records. And we tell you can figure it out because Kenya implements a self-assessment system. And then you ask me, Mudhoni, I just pay what I want. Then I tell you, no, you cannot pay what you want. We know how much you owe. How do we know what you owe? Through various mechanisms. Use of technology, use of banking data, maybe use of systems audit, just to ensure that we are able to confirm that what you are declaring as your income is really your full disclosure of income. But now the government just said, but you have to guess that number too, because that is the other side. And what if you get it wrong? Of course, Kenya, we don't take you to prison. In some countries, tax evasion and tax avoidance is a serious issue, a criminal offense, as is still a civil case, civil offense. And therefore, the courts will then pronounce on what remedies are there for you if you don't pay your taxes. So with that, I hand it back to you, Mudhoni, for the next.
Oh my goodness. What if I get it wrong? You go to prison. In all honesty, I thought we said we are partnering together so that we can all, make money for the country. Before I open it up for the Q&A session, I have my own two questions, Nixon. And it's with regard to the DAT. One of the issues that have arisen ever since the Finance Act was passed in 2023, it has gone through the court motions, High Court, Court of Appeal, all the way to the Supreme Court. So we've never gotten a final judgment out of the Supreme Court as yet, as far as I know. One of the issues that had been brought by the ecosystem players was even these issues towards the transfer, the exchange. You're talking about a fair market value, but in all principle, tax is supposed to be on income. So when I look at it, we are now giving the onus to the exchange to be the agent that collects the tax for you. First, my question is, you remember we used to file nil returns when the business has not made any income. So by the fifth day, this exchange is supposed to have collected tax from Mudhoni, from Nixon, from any person on this call who is running an exchange, for instance. And my question is, if there is no money no income has been derived, it's just been a transfer. And I do think it operates the same way as the stock exchange. No money has been derived, but the collecting agent, who is now the crypto exchange, is supposed to, have collected 3%. What is the implication? Is there an element of nil return so that we say by the end of these 5 days, the exchange is simply telling KRA, we've not collected anything, or maybe we've just collected from 2 or 3 people. Is that the picture that we are looking at?
Thank you. A very good and serious question, starting with the case law, that the cases that are within the courts. And you're right that a lot of, the motions that have gone from the lower courts, High Court to Court of Appeal, and now the case is at the Supreme Court. Mudhoni, you are aware, and I'm happy that you are a lawyer. The Supreme Court gave their orders in terms of, Finance Act 2023 still being implemented as the case is then heard and determined. Actually, yes. I think it has been heard. We are just waiting for the determination and then, orders and that they will provide. So yes. As it is now, Finance Act 2023 is live. And therefore, it's operating, it's operational. And part of what is in the Finance Act 2023 is the digital asset tax, which was effective from 1st of September 2023. So with that, then we expect all exchanges to be complying. And we are happy that a good number is actually complying and paying the digital asset tax. Now, you raised a very good question. Whose income is it? Is it a final income? Final tax? Remember, digital asset tax is a tax on the owner of the crypto asset. The exchange is acting on behalf of the government for purposes of collection. Remember, the exchange, their income principally might be the commission, which then they are accountable for other taxes, not digital asset tax, unless they also have their own crypto assets, which then, of course, will still attract the digital asset tax. Then you've drawn parallel to crypto to a stock market. If today I bought the shares of company A, okay, whoever is selling me to that share has transferred. And because digital asset tax is more of a transactional tax, then if there was a tax at that level, then it will be applicable. But me who is buying, I'm not subject to the tax until I also transfer what I have to another person. So that is the point at which the tax will then be applicable. And remember, for stocks, if you're owner of stocks, of course, the stockbrokers will charge you a transactional charge. And also, if you get dividends, they'll definitely be taxed, because that is what shares, of course, the old name stocks, are supposed to generate at the end of the day. But I'm wondering, in parallel to cryptos, what do you generate as a crypto player or as owner of a certain currency? I think I'll leave that question hanging so that we also ponder over it. Thank you.
Thank you so much, Nixon. My second question, and please, the rest of the participants are now free to ask their own questions. We had received some questions during the registration process, but before I get to those particular ones, the persons on the call can actually just unmute themselves and ask your own questions. So I think my final question is, I always hear KRA pull out this article of the Constitution 201, public finance management, and how when you're collecting taxes, it has to be fair, it has to be transparent. I'm just wondering, even from the betting ecosystem, the onus is for this agent, who is now the crypto exchange, to actually remit this tax within 5 days. Isn't that onerous? Or has it worked before? Because I think we have other taxes that we're able to pay by the 20th of the month, which is quite reasonable, but this one will be given completely just 5 days.
Yes, Mudani is a very important thing to speak about. Article 201 is a very important section because it says you can never impose a tax. Together with, from actually 209, 210, it's only through Parliament, and also we expect that, some of these things are done for the benefit of the current generation and future generation. Very important to look at the Constitution. However, currently there are many other taxes that are applied on a gross basis. And the gross basis of taxation is not unique to Kenya. I think globally, there are a number of income streams which are only taxed based on the gross basis. Look at our own digital service tax. It's on the gross basis because you are taxing an unresident who will not come back to file a return. Look at our section 12C on turnover tax. Okay, it is a simplified taxation because we are bringing it to people who are not going to engage experts to do their financial statements, experts to do their tax workings. So we are saying, why don't you have a simplified tax regime? Once you know your sales, all you need is to have the tax rate, and you already have the tax amount. So Mudoni, key is it is a simplified tax regime. Then on the issue of 5 days, I think this is something that the law that was brought to us through Parliament, of course, as dictated by the Constitution, that all withholding taxes, actually all withholding taxes, whether you are withholding a tax for paying a non-resident or a resident, it's also within 5 days. And that is the line that we see the digital asset tax. So businesses are withholding within 5 days. So the 5 days is not unique to the exchanges alone, it's also unique to other businesses. It's not even unique now, because it's also applicable to other businesses who have any kind of withholding tax to pay. And because the 3% is a withholding tax, then it follows that if all other withholding taxes are due within 5 days, then of course it is within 5 days. But again, as I mentioned earlier, Mudhoni, is that our doors are always open. If you need a discussion on the challenges of compliance within 5 days, that you find it onerous on the business to then pay the taxes within 5 days, I think if you're able to demonstrate those challenges, you can always have a discussion on how long you should be given to pay. However, the same taxpayer, the same Tax Procedures Act gives a taxpayer right to ask commissioner to pay tax, within a longer period than recommended by the law. The only thing that penalties and interest will still be applicable on the varied dates to allow you to pay the tax. I think that would be my comment on that for now.
Thank you. Thank you so much for that. I think we will get to a point where we talk about the penalty. But before we do that, I invite the rest of the participants to ask their questions. Please feel free to unmute yourself, or if you can't, just type your question on the chat session, please. Or if not, I'll proceed to ask the questions that had been asked earlier. Let me know. Anyone with a question?
I have a question.
So yeah, we have one question. Nixon, can you see it from your end?
Yes, I hear you very well.
Yeah. The question is, does that mean crypto exchanges, etc., can now have a bank account in their business name?
A very difficult question to answer at this stage. I think the advisory from CBK has not been withdrawn, and I don't want to speak for other regulators. So, Chantal, I think it's a good question. However, the law still is the exchange has to pay the digital asset tax. Does that not mean that I think the issues about their bank account can be addressed through CBK. I wanted to mention this. The same exchanges are actually paying digital service tax and VAT. So how are they managing? And two, we have the exchanges that are also paying the digital asset tax. Maybe there's something that we don't know, but there's a way that they are managing. And I'll repeat this. If any exchange find it difficult to remit the tax within 5 days, I think we can always sit down and see how best we can facilitate that exchange to comply.
So in short, your doors are open.
Yes, our doors are open, but yes, we might not discuss the bank account issue because that is a CBK mandate.
That's fine. I want to proceed to the questions that had been sent earlier on the registration form. How would you tax a company that deals purely with stable coins? They on-ramp and off-ramp stable coins, which neither appreciate or depreciate in value. I think that was the question, the volatility of crypto assets. Once the transfer has been made, then there's really no money that has been made. So maybe you can repeat that. I think you had talked about it. You can repeat that for purposes of the participant.
I think for an exchange that is dealing exclusively with stable coins, I will draw your attention to the private rulings request and right that you have. You come forward, we discuss, just demonstrate how the whole stable coins are operating in your ecosystem. And then from there, we'll be able to guide you appropriately. So what we do is we try to interpret the law in line with the business activity of the taxpayer. And if you are not satisfied, of course, there are other channels of dispute resolution. But I think I would advise.
Okay. The other question is, for instance, when we are looking at organizations that have been probably been given mandate by the capital authority, for instance, or if I want to know if participant is, how do I know which exchanges are compliant with tax collection? Is there a way to find out?
The Data Protection Act is paying and who is not paying, unless there's a case before the court that then becomes public information. But at this point, we can't tell you who is paying and who is not paying and how much. Just as you might not want us to disclose how much is your salary or how much your company is paying. Yeah.
No, you just have an appointment with the director. What is her name? ODPC.
Yes.
You might have
yes.
you might have a So I think the other question was this one you have touched upon, but allow me to just repeat the question. I'd like to ask the KRA representative can shed more light on plans to deploy a real-time monitoring system for tracking and collecting taxes. Are there plans to deploy a real-time monitoring system for tracking and collecting taxes?
Thank you. I will not say that there are no plans. There are plans, and the plans are in high gear. We want to not just track, because I think using the word tracking means like, we are just following you up. No, we want to simplify the process of payment of tax. So if we are able to have visibility of the transaction, we can also have the ability to deploy what we call split payment mechanism. So that as the exchange gets their commission, the 3% automatically also goes. And that's the benefit of technology. Mudhoni, I don't know if you walked into Times Tower, those days that we used to have lines moving from Times Tower to Central Bank. Okay? Those are kind of things that we want to solve so that taxes are paid easily, simply, okay, so that you concentrate on doing your business. If technology can then do the other part of taxing and remitting the amount, I think that would be a welcome move to everyone. But it's not just on the digital space alone, on the crypto. It is also happening in other sectors, and it's a conversation that we are having. Let me give you a good example. When we implemented our ETR systems, those days in 2000, and was it in 5 or 2004 or thereabout, you needed a gadget. You connect it to your invoicing system. The gadget doesn't give you any value. You have it there. You have to buy those papers every day. And even then, if a KRA officer was to visit you, he will ask you for a printout again. That is when we moved into the eTIMS, the electronic tax invoicing invoice management system. So that as you do your invoice, the invoice is also visible to KRA, so that tomorrow we don't ask you about the same thing that we already have. And if we are able to have the invoice, why not then also have the payment side as well? So that if it was a withholding tax, and let's say, Mudhoni, you've engaged my services as a consultant, and as you paid me after doing the consultant service, why not again remit the withholding tax directly to the taxman? That relieves you from a lot of other administrative challenges and matters tax, so that you continue doing your business. So yes, it is a system that we are highly thinking about and discussing now. But again, within the Constitution requires, definitely we'll reach out to the exchanges. If we are doing an API, if you are doing any technology for purposes of visibility and assistance in collection of taxes in real time, definitely we'll reach out and discuss. And we'll give you technical people. Of course, we need to understand your technology. Is our technology compatible? I think it's a discussion that each exchange will have to have with the taxman, and how it can be done in a more simpler manner, in a more friendlier manner, but above all, to ensure that business is still facilitated.
Okay, thank you so much
Yes.
for that response. So I have a very long-winded question. How do you tax a field without statutory regulations? I'll help you with a few things there in terms of regulations. And how will you account for funds or transfer if the same is done via the blockchain platforms? Thirdly, how will you tax a fluctuating field of valuation? Can I take that again?
Please
How do you
do.
tax a field without statutory regulations? I think
Tax what? Just come over here, tax?
how do you tax a field without
Yes,
regulations?
fields.
Yes,
Okay.
how do you tax this area without regulations? And then secondly, how will you account for funds stroke transfer if the same is done via blockchain platforms? And then thirdly, how will you tax a fluctuating field of valuation? I don't know what you meant by that, but I think it's maybe a fluctuating asset. So allow me to just make a comment in terms of the regulations. I know Nixon is going to say that President has said that you can tax anything that is legal or illegal. Kenya is, I think the word is ambivalent. I think that's the word, ambivalent. So we have not been declared crypto is illegal, neither is it legal. So we're in this sort of, vacuum. And Nixon, one of the things that we like to say in law, that nature abhors a vacuum, like it really gets disgusted by a vacuum. So we are hoping to get to that point where we'll have these regulations. But I think, Nixon, you can really touch on the point of all this precedent that has been said that whether an activity is legal or illegal, taxation must still apply. Maybe you can make a comment on that.
Thank you. Let me make a very simple comment. If I wanted to sell my shoes today, what regulations are there? Is it illegal to sell shoes, Mudani? Is it legal?
No.
Is it regulated?
It's not legal. It's not regulated.
Correct. Same. So what CBK simply had in terms of that advisory is engagement directly with the banks, which I wish not to enter into because I'm not competent. But nobody has said that dealing in cryptos is illegal. So it is business like any other, like selling pens. Maybe, KEBS will just come in to ensure that the pens you are selling, meet a certain kind of standard. But that is not basically, that to me, that is not regulation. So taxing a field does not need regulation. Even if we were to have regulations, will it change the taxation regime? But again, I want to mention at this point that there's a team, Mudoni, actively reviewing this sector. And I'm sure sooner rather than later, they'll reach out to the industry just to have your comments and input. And I think all these things of regulations will be solved at that stage, but I don't want to preempt. And then on the issue of accounting for funds via blockchain, I mentioned that at the end of the day, the exchange has to pay the amounts in Kenya shilling because that is the law that we are using with the CBK. Actually, government money has to be paid in Kenya shillings, except where statute have specifically allowed for payment in any other currency. And I think it's only the dollar. I doubt if we get any other payment from other currencies in terms of, taxes. So yes, the amount will move through the blockchain ecosystem, but at the end of the day, the exchange has to change them. Let me say, exchange has to exchange the same into Kenya shillings, which is then paid to the government. So it is accounted for. So if they generate a payment notification number or a payment receipt number of 100,000 Kenya shillings, it will be the 100,000 Kenya shillings to be paid. The issue of fluctuation of Forex and all that, we always advise that we don't have a law telling you have to use the CBK rates or ABSA rates or COP Bank rates. You can always use an exchange rate that is verifiable. And many people prefer using the central bank rate because it is daily, it is also verifiable. There are even taxpayers who have done an API with the CBK website so that the exchange rates are automatically generated. On the issue of fluctuation in prices, and I mentioned earlier that we even have taxation of land, okay? And prices are never constant. Unfortunately, maybe land just appreciates, but there's also land that can depreciate. We also have businesses who pay tax on business environment that is always uncertain. Sometimes it is favorable, sometimes it's unfavorable. You have people who pay tax based on sales, like the turnover taxpayers, who pay despite the fact that sometimes they might be on losses. So the basis of taxation that we have here is a gross sales basis of taxation. It is simply because of it is simpler to administer. Of course, there are nuances on whether if you make a loss or you make a profit, then it will bring those other challenges. But as it is, as the law is, it is based on gross basis, and therefore sometimes you might have to be hit if you make losses. But now that is not visible to the commissioner. I think those are some of the areas, Mudoni, as the industry you can work on if there can be a better way of taxation, including maybe based on profits. The challenge will be, how do you prove visibility of the profits made by the players in the crypto, in the digital asset world? I think some of those will be the challenges that we might have.
Thank you. Good. Thank you so much, Nixon. That is loud and clear. It seems even as the law and regulations are being formulated, it's important to have these conversations with the ecosystem players because they best understand as well how all this operates. Sometimes when laws are brought, the keyword here is brought, they are very onerous to even implement and enforce. So before we go to the final take in terms of penalties, how the penalties look like, I've not seen any questions so far. But Joseph, I do note your comment, but I've not seen any questions so far on the chat session. So I'll leave it at that. Nixon, before you comment on the issues of the penalties, I think I want to make a comment in terms of regulation. And we have always said we don't have regulation. And I remember about 2 years ago, trying to research into this particular area and trying to understand whether there are any legal underpinnings we can, support ourselves from a digital asset perspective. Bill, I'll get to you. So one of the things that in my research that I found out, if you look at the bigger financial ecosystem within Kenya, there are certain laws and regulations that do come at play. For instance, if I take the latest Data Protection Act, that is applicable in this ecosystem. If I take a look at, let's say, the Capital Markets Authority, I remember there was this case of Wise Talent. When you're trying to say we don't have regulations for digital assets, but when these people went to court, the court said that if it walks and talks like a duck, then it is regulated by the regulations by CMA. So the idea that we completely are in a vacuum, I think that is a bit too far stretched. So the laws that operate within the bigger financial ecosystem, they still play within the digital asset space. What is lacking is what we call a bespoke regulation that just specifically speaks to crypto, because then it helps it to define, make definitions correct. One of the challenges that the petition that was being brought from, I think, the Blockchain Association of Kenya, is the definitions and all manner of things where things have not been gotten right. So what we are really lacking is a bespoke regulation. But if you look at the wider financial technologies regulations, they play a part within the digital asset space. So we really don't have a complete vacuum. So Bill, before I get to you, let me see whether I think there was a question. All right, no, I don't see the question anymore. So Bill, I think you can unmute yourself and ask your question.
Thank you. I have a quick question. On the digital asset tax, which seems to bring the most problems. You say it is 3%. Now, if I could take you through a normal transaction of buying a digital asset, let's say someone wants to buy Bitcoin, they will on-ramp it to an exchange and ideally buy a stable coin, which is USDT or USDC. Now, according to this law, that's a taxable event. Now, with the USDT, they probably buy Bitcoin. And then that's another taxable event. And then from Bitcoin, if they want to sell it, they go back to USDT and then back to Kenya shilling. Now, in this whole transaction, do they tax every time someone sells an asset, first on ramps and then uses USDT to buy Bitcoin, and then from Bitcoin back to USDT, and then from USDT back to Kenya shilling? I mean, that will be a lot of taxes for just that technically one transaction.
We're almost at 9%. Nixon?
Yes, I get you. I get you. And we've given guidance on what an exchange entails. Because if you're the same person who is having Bitcoin and you're moving them to USDT, because you can't move them directly, you have to get into the USDT, then finally into the fiat, then that does not attract different taxes at every exchange. And I mentioned this, that we invite the exchanges to come for interpretation of what an exchange, a sale or a transfer then means, so that we are on the same page. And we have the right to be guided on what it means. But again, I hear you. I agree with you, Bill. This will be quite onerous in terms of taxation. So the tax point will be when you move from Bitcoin to USDT, okay? But now the other challenge will be, what if you move into USDT and go back to Bitcoin? Will that be a taxable event? You know, so those kind of complications is what we are inviting the industry players to come forward. We discuss, and then we are able to guide on what is the tax point for your transaction. Because if you move from Bitcoin to USDT, then you move then finally to Kenya shillings. Of course, there's a very clear fact pattern that you intended to off-ramp and you have gained, and therefore there's an exchange. But is the exchange at the Bitcoin USDT or USDT US dollars, for example? And if you get to USDT and go back to Bitcoin, how do we treat you? If you get to the dollars and come back, is it another exchange? But remember, when you get to the USD and you're coming back to a stable, you are basically not exchanging at that point. You are more buying. The exchange will occur when you are leaving, you are off-ramping, not on-ramping. Not sure if that is clearer, Mudhoni?
Bill, I hope it's clear, but I know the wording of the amendment, the income tax, leaves a lot to be desired. I think maybe at some point we want to
True.
give it some policy guidance or regulations,
Sure.
because reading that particular section the way would ordinarily read it, that implication is not explicit. It's not. So I think there is room for some policy guidance or regulations to go hand in hand with that. Anyone else with a question? I can't see any in the chat session.
I think I was just to make a comment. I was going, thank you, Dixon, for your answer. And I think I'm also an advocate. I think we'll be applying for a lot of private rulings moving forward.
You're always welcome. We'll never tire.
So I can see a question in the chat session. Is the 3% applied both to the seller and the buyer, or is it 1.5% for seller and 1.5% for buyer? Some articles online can be confusing on this. Please clarify. Is the 3% applied to both the buyer and the seller, or is it half Solomonic wisdom of 1.5, 1.5?
Okay, thank you.
Like to have some answers.
Thank you, Charles, for asking that question. And I wish we also comment on those articles that might be confusing or misleading. The 3% is applied on the Kenyan who is exchanging the crypto assets into a fiat currency. I think that is the straight answer. But we've seen it before with Bill's question that it can also be a bit murky when you introduce those other intermediary transactions. But if you look at the reading of the law, it should be a Kenyan is off-ramping. So the buyer is not subject to digital asset tax, okay? And we are looking at a Kenyan who is, and so an unresident who is selling their coins are basically not captured in this tax.
I hope as well, Charles, your question has been answered. Anyone else with a question? Anyone else? I like to put it through like the auctioneer's hammer, going once, going twice. All right, so there's a question here. To your question, Nixon, an airdrop, or you're being schooled a bit here, Nixon.
I like it.
So an airdrop is like a giveaway. Perhaps BitKE can airdrop you a few Bitcoins into your Binance account for your time with us. LOL.
Chantal, I hope I'm getting a few immediately.
So any other question? I think we were at going twice, going thrice. Unfortunately, the hammer is down. Thank you so much, ladies and gentlemen, for onboarding and for your participation in this particular webinar. We do hope, as Nixon has highlighted, that we get to have more and more conversations so that we can understand. I know, Bill, you're seeking that you have a lot of private rulings, but I think if KRA can give us policy guidelines so that all of us don't have to have all the private rulings. So that everybody can access that information. Thank you so much, Nixon, for taking the time as well to school us and educate us on this tax and how KRA is going on about it. We really appreciate your time, and we appreciate everyone's time as well.